We are keeping one eye on that forecast for the next 48 hours or so, as it will get nasty. Speaking of getting nasty, it has been getting nasty in the state capitol. Well, not nasty yet, but we're getting there. And look, to a certain extent, this has got to happen. Well, how did Clemenza put it? Every 10 years or so, you got to go to the mattresses, cleans out all the bad blood. Am I setting the tone too much for Insurance Commissioner Tim Tipple? How are you, sir?
Morning, Brian.
Yeah. Do you want to distance yourself from my comments already?
So good to see you today.
Likewise, always. And look, don't let my rhetoric get in the way of what's actually going on. It's I'm being over the top, to be sure. We got a lot going on inside the state capitol right now. A lot of really, really, really good bills are getting to the point where we might see some change to them, some scrutiny, some watering down, whatever, or some just flat out stalling out. Before we get into those bills, though, at 4 weeks plus into the session, can we reset the table here and get back to the genesis of the discussion? And that is, our car insurance rates are too high. I would like, if possible, kind of a 10,000-foot view. What determines car insurance rates?
Yeah, Brian, good question. But look, before we do that, I know y'all been talking about the weather this morning, and I just want to take an opportunity to tell everybody to be weather wise today. I mean, they've been talking about forecasts, potential flash flooding since yesterday, day before. So it's a real threat. Be aware of it. Everybody knows how to take precautions, but just watch the weather today and tomorrow.
Absolutely. Yes.
Insurance. Yeah. Look, rates, whether you're talking about auto or homeowners, workers' compensation, umbrella, general liability, it's all based on the premise of companies charge a premium based on a predicted loss.
Okay.
So they take loss history, then they take the physical risk itself, whether it's a car, whether it's a home, and then they apply factors and they come up with a premium. And, I've been saying for a while, premiums follow losses. If they charge you $1 this year and they have $1.10 in losses, then next year, if they want to stay in business and want to be able to pay claims, then they need to charge more than what the next round of predicted losses is going to be.
Okay.
And when we talk about a lot of changes going on, a lot of this changes is designed to force premiums or losses down so that premiums will follow. Right. So that's what we're talking about. So think about your homeowner's insurance or your car insurance, but either one. If you think about the amount of money that you pay in premiums versus the risk that the insurance company is assuming, do your own math. How much you paid for homeowner's insurance this year?
Okay.
How much you paid for auto insurance this year versus how much the insurance company has to pay out if you have a max limit loss. If your home, right, it's somewhere around, a lot of times it's around 0.5%, 1%. Maybe we're getting a little higher than that right now. But think about that. 1% of the limit that they've got exposed. How do they do that? A lot of people, well, how does that work? Because it doesn't work for you and I just on a day-to-day basis. It's because they have large numbers. They write a lot of policies, but they also have surplus. They have money in the bank. Okay. I say that, insurance companies pay claims on a debit card, not a credit card. They pay claims
makes sense.
With money that they have.
They are a for-profit business. They need to make money.
They're a for-profit business, and we want them to make money so they can pay our claims. Right. When you have a claim, you don't want them to say, well, look, we only took $100 in on your premium. I know you got $1,000 loss, but we're only going to pay you $100. No, you want them to pay the $1,000, whatever they're obligated to pay. Well, they've got to do that by having money from other customers that don't have losses, right? And also having money in the bank, surplus. So that's what part of the profit that they make. And I know we're having conversations on what profit is and excessive and all that, but part of the profit that they make goes towards surplus, putting money in the bank, also making investments, stock market, bonds. I mean, look, insurance companies own hundreds of millions and actually billions of dollars of Louisiana treasuries, of Louisiana bonds.
Really?
They invest in Louisiana.
Okay.
We've got pensions. All of our pension funds have huge investments in insurance companies. They're good quality, right? But insurance premiums, it's, and again, I know there's a legislation going on, who can say who deems what excessive and all that, but insurance companies in Louisiana today have to prove the math. If they want to charge a premium for the risk they're assuming, they have to justify it to the Department of Insurance through actuarial science, through actuarial numbers.
Okay.
And if it's too little, If they want to charge less than the premium needed for the risk that they're assuming, that's called inadequate. And we don't allow that.
And, well, just to be clear, why wouldn't we allow that?
Because that means that they are likely to not have the money to pay future claims.
Okay.
They're not charging enough money to cover future claims. If they charge too much money for the risk they're assuming, that would be deemed excessive.
Okay.
And we don't allow that.
No, and we understand why we don't allow that.
And I have disallowed that. I have told insurance companies 39 times since I've been commissioner of insurance, your math is not adding up. Go back to the drawing board.
Okay.
21 times I've told companies their rates are excessive, meaning you're charging what you want to charge is too much for the risk you're assuming.
Mm-hmm.
So I have the authority and I exercise it. If the premium they are charging is just right for the risk they're assuming, then that's called rate adequate.
Mm-hmm.
And then we approve that. We let them use that rate. So, this conversation that people are, and it's a false narrative that, as commissioner of insurance, whether it's myself or the previous commissioner, we've had the current rating structure since 2007, 2008, when Governor Mike Foster abolished the rating commission.
Mm-hmm.
It was a very politicized body, and he got rid of it because of that. And the current structure works. Insurance companies have to prove the numbers. The problem in Louisiana is we don't like the math. We want to ignore the math. We don't like the fact that we have losses so much that it justifies the premiums being charged.
I
know that's a lot to take in.
No, and I don't want to get distracted on this, but the way you're describing this, I think your words just a minute ago, where I have the authority and I exercise it. When it comes to the idea of changing up your office and giving your office, as I believe the governor said, the same power that Mississippi and Texas have, the way you're describing it, it sounds like you already have that.
I do.
Okay.
And like I said, we exercise that. I'm just going to say, be polite and say it's a false narrative that the Department of Insurance, the Commissioner of Insurance, myself, does not have the authority to deny rates when they aren't actuarially justified, whether up or down, excessive or inadequate. I do, and we exercise it. Like I said, we've done it numerous times since I've been commissioner.
One of the other talking points we've seen along the way is that insurance companies, are making record profits.
Mm-hmm.
One of the things that I have not followed up on that is, are those record profits nationwide or statewide?
Well, look, I still have not. I know a lot of numbers have been thrown out there by the group of status quo, the people that don't want anything to change in the state, and they keep referring to, billions and billions of dollars made by the industry, and they allude to the fact that it's being made here in the state of Louisiana.
Yeah,
and I can show you. And look, I have demonstrated. I've sent this out to media. I've sent it out to the House and Senate members. I've sent it out to leadership to show them NAIC, National Association of Insurance Commissioners database. It is the gold platinum standard for numbers. Historically in Louisiana, insurance companies lose money, both property and auto.
Right.
And you can't take a look at it any one year. Did they make money last year? Yes, I think they did in Louisiana. A little bit.
Yeah.
Historically, over a 10-year period, they've lost a lot of money. It's like a 1.7%, 1.70% loss ratio on commercial trucking. So that means every dollar they took in, they wrote out $1.70 in losses, right?
If I'm in business and I'm doing that, I'm going out of business.
You're going out of business, and that's long term. And we want companies here. I don't want a company to come in 1 year, write your auto or your homeowners, make a little money, and leave. Right. That doesn't do you any good. It doesn't do the stability of the market any good. We want companies here long term. So we have to acknowledge that in the current environment, the current legal environment on auto, they lose money historically. Property side, yes, they lose money.
Well, so I've always just assumed they lose money on the property side because that's that Hurricane Alley, the whole works.
And we want these companies, it's all of a sudden profit has become a bad word in Louisiana for some reason. Look, and I get it. If you think that they're making gobs of money off of you and I in premiums, I could give you a little credit if that's what was actually taking place, but it's not. And so we've got to be transparent and we've got to be honest with ourselves and realize that insurance companies doing business in this state are not making money historically. We want them to. We want them to be here. But let me tell you this: if that is the case, if there's people out there that believe that insurance is, you come to Louisiana and you're just going to get rich in the insurance business, let's start a Louisiana-based insurance company.
Didn't we do that already?
Let's start writing.
Property?
Well, we do for work comp.
Yeah.
LWCC.
Yeah.
We have Louisiana Citizens, but it's not. It's a non-profit. You know, it's not supposed to. It's supposed to make enough money again to cover future losses and have proper reinsurance. But we don't have anything for auto. And I propose that let's have that conversation. Let's create a market. Let's start with commercial trucking. Let's create a Louisiana auto commercial auto corporation. LCAC. Let's do it. If so much money is being made that the leadership and trial attorneys and everybody says that these companies are making gobs of money writing vehicles here in Louisiana, let's get in the business.
But you already know that's a bad idea.
I know it's a bad idea.
So it's
But if they think that's the case, then let them stand up and say, yeah, let's do it. Let's make some money here. But it's not happening.
We have 4.5 minutes left with Insurance Commissioner Tim Temple, and I've got 45 minutes worth of conversation to be had within that time. Let's check in on some bills, if we could, please. Let's start with an open-ended question. What bill are you most feeling positive about? I know it takes a whole package to get any real movement here, but what are you feeling the most positive about?
I can't answer that because there is no one. And let me tell you, but this is what happens.
They all end up in the same damn committee on the Senate side. I'm sorry, I'm going to get you in trouble again. But
look, I'm in trouble. Don't worry about that. Look, I can tell you if I say one bill I like better than the other, then everybody's going to take that and spin it into this is a magic, this is a silver bullet bill. But I can tell you again, because insurance is complex on the fixes that we need to do. It takes a lot of different bills, but let me just run through. There's a couple of them. You've got, the bill from last year, Housley presumption,
Michael Mellorine's
bill. We've got, last year it was referred to as collateral source. We're calling it medical transparency.
It's Representative Glorioso's bill.
Right. And look, we didn't, the name isn't changed because trying to do anything nefarious like the other side, the status quo group wants you to think. It's because most people in this state, despite the number of attorneys we do have, most of us still are not attorneys. Right. And so when you say, collateral source, that's more of a legal phrase. Medical transparency, most people can relate to what we're talking about.
And to break it down even further than that, it's the amount that's billed versus the amount that's paid.
Correct.
And there's a discrepancy between the two, and the amount that is awarded doesn't necessarily have to be the amount that's paid, which I will never understand.
Right.
But that's where it is you can take what's paid and then ramp up to what was billed from there. So
medical transparency.
Right.
There you go.
Fixing that is a problem.
That's another bill. Modified comparative fault. I mean, that's a strong bill. I think 34 other states have it. We don't. No pay, no play. If you drive around without auto insurance and you get in a wreck, you shouldn't be able to recover. Now, this bill doesn't go that far. It says you just can't recover the first $100,000. So, you run into a truck, and even under today's law, you run into a truck and it's your fault, you can still sue for that $1 million or $2 million or $5 million or whatever you want. You just don't collect the first 100,000.
Okay.
So, it's a step though.
Yes.
It's called, stumbling forward, if you will. Damage cap. That's one that we've seen other states in recent history have started taking to tackle their auto liability, legal liability reform. Damage caps. Our neighbors to the east of Mississippi, they can't collect the first 1 million. I mean, it's capped at 1 million. There's a bill by Senator Blake Miguez, loser pays. If you bring litigation and you lose, then you have to pay the prevailing party's legal.
I've actually got that one printed out for 8:15 when Blake Miguez joins us.
Oh, great. Yeah. Good. Well, I'm going to try and tune in and listen to that. So, so those are a couple of good bills. Now, look, the House got about 16 or so bills off the House floor over to the Senate. They'll be going through the process. I believe that Jude A is going to start hearing bills next Tuesday, the 13th. That's what I was heard. So I get your listeners to tune in, pay attention to that, log in, call your legislators, ask them to demand actually that they support these bills coming out of those committees in strong fashion, the way that they got them. They came out of the House and let the Senate have a good, strong debate on the Senate floor. That's what we've not had. We didn't have that last year. We need it. The citizens of Louisiana and businesses deserve it.
The only one that doesn't look like it's going through Jude A would be Kim Carver's bill on advertising. Does that potentially stand a better chance because it's not going to the committee that kills everything?
Well, look, that's a bill that discusses advertising, but it doesn't limit it.
It enhances it.
Well, we got to talk about that. I mean, I'm all for transparency. I want more transparency, but I don't want people thinking that this is going to have a direct impact on losses.
He is Insurance Commissioner Tim Temple. The clock has just caught up with us. We'll be back in touch very, very soon. Thank you for the update, sir.
Thanks for the opportunity.